2, 1. It's about that time again for Ready, Set, Real Estate. I am so pumped, you guys. We've been having an amazing week, just amazing season already. Thank you for tuning in on episode 12 with our guest, Mariette Martinez. She is a tax pro, public educator, and she's actually agreed to do a 3-part series with me. And this is now part 2. We are covering taxes for real estate investors. If you missed the last episode where she was on, check out episode 10, where we talked about taxes for the real estate agent / and or professional, or if you call yourself super agent like myself, do pay attention to that episode. And I'm really excited to have Mariette on the show. I just want to take a moment to just let you guys know just the power in this woman that we have here today with us. I told Mariette that I would read a little bit of some of her highlights, professional designations. I'm just reading it right from her website, you guys. Like, you can check more about Mariette at mariettemartinez.com. If you are viewing us online, I have tuned it in, mariettemartinez.com. So let me just say this. It's gonna sound like that disclaimer. Let me bring Mariette and bring her beautiful face on. Hey Mariette, how are you?
Hello, so happy to be here.
Yay! I'm going to do it like how they do on the radio where it says DRE 017366957.
We're very official here. That's why we're wearing our glasses.
Right. So Mariette is an IRS enrolled agent, y'all, since 2009. She holds a California licensed insurance license since 2016, BS in accountancy at the California State University Northridge, class of 2002. She is an Intuit Accountant Council member,
yes,
board member of the National Latina.
My goodness.
I know. Board member of the National Latina Business Women Association of the Inland Empire. Shout out. I see you give them a lot of love if you're connected with her. This woman is very connected, and she's all about supporting others, and in particular, a passion for small business owners and entrepreneurs. She is an Intuit trainer, writer, network member, co-admin of the Latino Small Business Owners Facebook group. Check this out, y'all. Listen up. With over 4,000 plus members. So she's definitely got a niche market. As you know, and I've shared this before in the last episode, she's a public speaker and educator at various industry conferences. And yes, she has been at NAR, National Association of Realtors Conference. That's huge. She's been a blog contributor for Intuit Pro Connect's Tax Pro Center and Seth Davis Between Wall and Main. And she does a lot of the QB stuff. QB stands for QuickBooks. She is a certified QuickBooks Pro advisor since 2007. And get this, as a co-organized Woodard Group, first bilingual Spanish track at Scaling New Heights. I'm telling you, yo. Yes. I had to do that, Mariette, because I know you, my tribe doesn't, our listeners doesn't. So I just really wanted to honor and recognize one of my sisters in business for all that you have put in, time, work, energy, highly intelligent, motivated. So I just wanted to just do that. I owed you that.
Oh, thank you. And it's humbling for someone to say all those things, but yeah, I mean, it's always been a partner for a tribe effort. We don't do any of this stuff alone. Right. And enough people have to believe in what we're doing and believe it's important enough to get involved. So I'm just grateful for our community, and I'm grateful now you and I are in the same community. So it's just, we're stronger in numbers, which is awesome.
I love it. So for those who have been excited about hearing about today's episode, taxes for investors. Again, this was a 3-part series, and I think it was very timely that we're doing this in the last quarter, right? Because as 2019 rolls around, depending whether you file extension or not, at some point in time, you're gonna have to deal with taxes.
Exactly. So, and actually a quick disclosure here for those of you that are watching, because you're going to watch now, and Lisa blew me away last time when she told me all the platforms it's at for the recording. So it's like going to be all over the world. So, this is going to be a session about accounting and taxes, but we are not giving any tax advice here. You please do not use any of this information for your own tax preparation situation. Everybody has unique situations and have to refer back to their tax professional on what they need to do to move forward. So we're just going to give some tips and discuss some scenarios, but this is not tax advice in any way. Just want to make sure
I like it. I told you we were going to do it like the commercial. DRE number 017366957.
Exactly. Love it. So I want to get started. I mean, there's so much going on. If you want, I can just kind of recap last time, which was when we actually tried to take the scariness out of real estate accounting.
Absolutely.
And kind of set the stage. Lisa and we did very well, I think. I went back and watched the recording, and we really wanted to explain that this is a 3-part series because there are really 3 parts of real estate accounting, and they're completely separated, both in regards to the way you deal with your financial accounting, the tax accounting, the ramifications of how you actually organize all of your transactions, and most importantly, you may be doing one of these things, or you may be doing all 3 of these things, and you really have to understand that based on what you're doing, whether it's just real estate professional, as real estate agent, or real estate investing, meaning owning properties and selling long-term usually, or real estate flipping, which is actually short-term, you have to wear different hats. And that's why we really were big about wanting to have this separate, because we want you to wear the different hat and really understand that you really have to change your mindset based on what you're doing. So that's really important, and that's why we did it in 3 parts. So today is taxes for investors, though. So that's what we're going to cover today.
Absolutely, yes. And you did that so perfect, because it's easy, I think, for us as professionals when we are agents, and then the goal is to stack our money and then get into investing. And then we forget now we're wearing an investor hat, and the way we are running our businesses and portfolios should be different, right? Like the expenses and stuff like that. So I just really wanted to just create a space and a place for our listening audience and those who are thinking about investing, who are now investing, albeit you just started or you've been in it for a while. If there's just one thing that Mariette can offer as an added value, we have done our job for today, for the show. If you are tuning in on the replay, I just have to shout out to our replay listeners on Spotify, iTunes, Google Play, Android, wherever you are listening. Be sure to drop a comment, send some emails, DM us. And if you're on the live and you catch us on a replay, please use #replay. I really love to see a lot of you actually find the time and to come back and tune in. So I'm serious, love y'all for that.
I love the replay. I mean, a lot of us, we don't have time, or, we're not sure when someone comes on. I mean, that's actually how I met Lisa, because you were on with Clint, and I got this cool little message that says, Lisa's on. I'm like, oh my God, I got to get on Facebook Live right now, but we don't always know when each other is on. So the replays allows us to go back and listen and really learn from each other. So thank you for that. Thank you. All of those apps that allow you to go ahead and share this with the world at different times, at our different times in our days. So I appreciate that. So the way I really wanted to set today up, again, kind of setting the stage, and you and I will have a conversation like we did last time, is the fact that with real estate accounting for realtors, we talked a little bit about some apps. We talked a little bit about, the top deductions and kind of transactional things you should think about as a realtor. Now, as an investor, you have a lot more things going on in that portfolio, as you mentioned, and there's different ways to actually put yourself in the place of an investor in regards to what you need to control when it relates to accounting and taxes. So we're only going to refer to accounting and taxes because there's so much other stuff you have to do in that business, of course,
right.
But we're only going to focus on accounting and taxes. And so I took some time the last few days, and I really wanted to build out almost like a 4-part way to set the stage. And when I started thinking about all my clients that are investors, I almost went back to the first meeting that I had, because I do a lot of small business coaching with them. And, one of the kind of things that we talk about to just kind of clear the air and make sure that our conversation is going to be beneficial, meaning we're talking the same language, right? Because that's sometimes what happens with accounting and taxes, is that you're not even talking the same language. Like, you don't understand each other, And so 4 things that kind of came to mind when I started thinking about my conversations with investors when it comes to accounting and taxes, of course, is the first thing we always have to talk about is financial literacy, from the perspective that there's financial accounting topics and there's tax accounting topics. And so, which is really important, because the way you track your finances for your investments, for your rental properties, is maybe different from how you're going to actually report the information on your tax returns. And so there's 2 conversations there. Is let's make sure you're handling your financial accounting, make sure you have some type of system to collect all the transactional information, but then make sure you're having a conversation with your tax accountant, because they need to report that information in a way that's going to be most beneficial to you. Meaning, how are you going to depreciate your assets? How are you going to report some specific information? So those are 2 different conversations. But before you can even consider taxes, you need to be handling the financial accounting. You have to, because then you have nothing to give your tax accountant, So that's number 1.
Okay.
Yeah. And when I was thinking about financial accounting, some things that came to mind right away is, I have my 2 different investor type of, personas. I have the investors that are like, oh gosh, I know what you're going to do right away. You're going to put me in QuickBooks, and you're going to have me collect all these documents, and you're going to have me create this really complex, document storage where I have to keep all my settlement statements and all my expenses and all my transactions, and they get overwhelmed. And I always tell them, you know what? Let's do whatever works for you. Do you know Excel? Can we just put your transactions in an Excel spreadsheet? Maybe every property you own, let's have an Excel spreadsheet that's called, rental properties. And let's have a little tab for every property with their address at the bottom of their tab. And then on each tab, I just want you to tell me what the rental income is and multiply that by 12. No big deal. And then tell me what those monthly expenses are. And let's just list those up. Some of them being, monthly expenses that repeat. Some of them may be something that come up like a capital expenditure, or, unfortunately, you get flooded. And so you have to do all this additional improvements or repairs that you weren't aware of. Those may be variable, but usually with rental properties, there's a lot of monthly reoccurring transactions. And all you need to do is give me that once, and I'm going to multiply that by 12. And that's it. Like, it's that.
I love that you're saying that, because I want to jump in here for those who are listening and those who are kind of used to this. So capital expenditures, essentially what you're talking about is a cash flow statement. We're talking about incomes and expenses. And I love that you said something simple as take an Excel sheet, because for those of you investing or thinking about investing, you cannot determine whether that property is a good investment until you run the numbers. So all she's asking, or all, that tax professional is asking for, is let me just see the numbers. And by the way, in a real estate transaction, when you do sell that property, you owe that to the new buyer. They do want to see that cash flow statement. They want to see the expenses. They want to see what they're signing up for, because that's how we determine what we are netting. Love it.
It's that simple. It's that simple. And, and that's why I'm saying, in my case, for most of my clients, I would go ahead and say, if you're already comfortable with this Excel idea, let's just take it up a notch and let's put you in QuickBooks. Because in QuickBooks, what we can do is that we're putting the numbers in. I'll teach you how to do that, per se. Like, let's say we're having a conversation. I'll teach you how to do that. But what I love about QuickBooks or any other accounting solution is that with a click of a button, I can show you what those statements look like. I can produce a profit and loss or a cash flow statement or a balance sheet that basically will tell me all of the assets you're holding. So a balance sheet will give me the balances of every asset you're holding. So all the properties you own, right? And so in Excel, unfortunately, it's still a manual process. So I'd have to take your transactions. I'd have to create a manual, a manual financial. If you're using an accounting product, like a computerized product like QuickBooks, literally you just go to reports, P&L, or reports cash flow, or reports balance sheet, and magically it's all there for you. So usually that's what I'll tell my clients, like, we're trying to work smarter here. I know initially maybe it's an investment, and I want you to see it like that because you're an investor, so you can understand that there's got to be an investment in the beginning of time and of money. But ultimately, we're trying to make you be in a situation where, like you just said, what if you're buying this investment to sell it in 3 years? You need to keep track on how you're doing. Are you making money on this? You know what I mean? So you need to keep track of the financial accounting. So that's just financial accounting. And financial accounting, it's as simple as you said. Keeping track of those transactions is easy as an Excel spreadsheet, but knowing that if you use Excel, there's some manual work that needs to be done. Or if you use QuickBooks or another computerized accounting solution, it's all done for you because everything is in there. All the reports are there for you. So that's number one. Number two is tax accounting. Completely different. Okay? And this is where it gets very, very scary and very, very intimidating because the financial accounting is something that could usually be learned. And that's why financial literacy is so exciting because you can go from illiterate to literate. I mean, that's most of us do that, right? Now, going from, learning finances to learning taxes, that's where we get really scared because our brain doesn't think like that, So you just have to start getting really comfortable with when you go with your tax accountant, you start asking them questions like, okay, I heard this thing called capital gains. I heard this thing called depreciation. I heard this called, recapturing. Like, what is all that stuff? You need to start asking those questions, and your tax accountant needs to teach it to you. Like, you literally need to learn that from a tax accountant because they need to explain it in a way that makes sense, that the light bulb turns on, because that's the part that we get really scared about. And we need to, but as an investor, you have to understand that. Because again, what you're doing on the finance side needs to be reported to the government. That's the tax accounting side, And so you need to understand those things. And maybe it's a class, maybe it's a course. I had mentioned to Lisa, one of my favorite online experts, his name's Mark Kohler, CPA. He's a CPA and an attorney. And he has an entire tax library for real estate accounting that teaches these type of these concepts. And I appreciate him because he has tons of stuff free online. He has YouTube videos and he does Facebook Lives. He's always on entrepreneur.com sharing all these information. But like, if you really need to understand this stuff, you need to make that investment to learn a little bit more. And I learn a lot from him. He has this like unlimited library where you just pay once and then you have access to it. But those are the kind of things you got to learn on your own. And it takes more time because that tax accounting is just saying it is scary. You're like, oh, I don't want to learn the tax side.
Yeah, it's so funny because I'm feeling overwhelmed, right? And I consider myself an astute young lady here. And I'm like, all right, Mariette, looks like I'm now going to have to commit 6 months to a year to learn. I got to go to the free tax library and learn to, get a little bit more involved with the depreciation and the capitalization and the capital gains and so forth. And see, folks, this is why I do this. For those of you who think real estate is just the selling and the buying, not so much. No.
Definitely not. But I'm gonna give you full disclosure. Once you learn it, it's so empowering. And I'm just gonna give you an example. So when you're a long-term investor, and we're gonna use this example because we're gonna talk about flippers in the next series. When you're a long-term investor, which essentially means you hold a property for more than 1 year with the intent to sell it, as a long-term asset, you actually have to pay capital gains on that. Okay, I'm gonna throw some terminologies. I'm gonna keep it real simple, right? But you have to pay capital gains. What are capital gains? Basically, most of us know what it means to pay taxes on our ordinary income, which is like our W-2s. Okay, we all get that because the money gets pulled out of our paychecks, right? But when we sell a property that's been long-term, when we've been holding it for more than a year, we also have to pay taxes on that. And those taxes are the taxes that we pay on the gain of that property. So in other words, keeping it simple, the profit of that property. But how do we calculate the profit of that property? We had to have done all the financial accounting part of it. So if we weren't doing the financial accounting part, then we can't calculate the tax accounting part, which is the capital gains part. Do you see how they need each other? Like you can't do one without the other. And so, so once you understand that, once you're like, okay, I get it. So I need to do the financial part so I can calculate the tax part. And I want to calculate the tax part because now I understand I need to calculate my capital gains. But then I heard something out there. I heard something from somebody that capital gains gets taxed differently. What is that all about? And then you go and do a little research and you're like, you know what? Capital gains has a different tax rate than when you get taxed on your ordinary income. And so then we're not going to go too much into that because now we're getting really into heavy taxes. But the point is that you may get taxed only, let's say, 10% on that sale of that long-term property, but you may be at a higher tax bracket for your other income. And you're like, what? How is that happening? How can I be taxed 10% when I sell my rental, but I'm actually getting taxed 20% on the rest of my income? That's because we're in an actual tax system where you get taxed differently based on the different line items on your tax return, right? So that, I mean, I'm going to just keep it at that so I don't complicate things. So if you actually look at your tax return, which I do with every one of my clients, I tell them just go into the area that says income, which is line 7 through line 17. Just that. Literally pull up a 1040 and pull up line 7 and line 17. And there's a bunch of different line items on there. And based on the number that's on each one of those lines, you may get taxed a different tax rate on it. Wow. And so you're like, wow, that's crazy.
Yeah.
Right? That's a little nuts, right? Well, just like you said, real estate isn't just buying and selling. Tax isn't just filling up a form. You know what I mean? There's a lot going on behind the scenes, and that's why you have to have your conversation with your tax accountant. You need to. It's just critical to understand all of this stuff.
Right. Shout out to Latia, Linda, Desiree for chiming in, giving some love, saying hi, hello in the hearts. Thank you. Thank you. Oh my goodness. I'm feeling smart today.
Hey.
I'm feeling smart today because this is, and let me say this, it's almost like my own personal, right? I'm like, what do I want to hear about? Oh, we need to deal with taxes. And so I think this is very, very timely. And listen up, you guys. Take the 1040 form, pull it up, pay attention to line items 7 through 17.
Yeah, I'm actually going to double check that. I'm going to pull that up, but I'm almost positive. After all these years, I should have those lines memorized.
30 plus years. She's got 3 decades in, y'all.
Desiree can help us because she's an awesome CPA. She's a good friend of mine, so she could probably confirm that for us. Right. But I'm pretty sure that that's what it is. Maybe there's a few more numbers. Maybe it's 21. But anyway, yeah. And and I'm going to suggest something for all of you investors and anyone that's watching this. Actually, it's actually 7 through 22. So there's a few more there. 7 through 22. So I would love I'm going to ask all of this. I'm literally going to throw that out to the world. And I would love for you to sit with your accountant now, not in January or February or March. That's not going to do that's not planning. And this is something that's so incredibly important for those investors that are trying to plan and be ahead of the game. You're supposed to be having your appointments now, last week, September, November, December, because you're going to set all this out on the stage and you're going to let them know how you're doing. And you may let them know that you're considering selling a property. And what they're going to do is they're going to do what's called a tax projection. And they're going to put those numbers in their system and they're going to say, if you sell this property, this is what your numbers are going to look like. You're going to owe this much in capital gains. taxes. You're going to owe this much in ordinary taxes. You're going to owe this much in depreciation recapture taxes. Those are different tax rates. And then you're going to say, what? Like, you know, I thought it was just, you know, one amount and put a little percentage to it, you know, whatever, 30,000 times whatever my tax rate is, and that's it. And that's not true. Right. And so the only way you can figure what that looks like is to have an actual tax planning meeting, which a lot of people don't have, where you're planning for your next move. And I've had those with my clients where they go ahead and say, oh, Mariette, now that you said that, no, we're going to have to hold that another year. We didn't know that's what it was about. We didn't. And, you know, and the thing is, they'll say, I really wasn't wanting to sell it. I just kind of want, you know, I heard that it was a good time. And so that it's like, okay, well, let me show you what it looks like. And then you can make a decision. And then that's how we move forward. And so, you know, go out and do those type of things. You know, I totally suggest you make that extra effort and not be blind at your meetings, because that's what ends up happening. You know?
Right. I love that. So Linda's like, I love this topic. My husband and I own 65 units in Rhode Island. Happy smiley face. Now, yo, Linda, you're like next level. So you can tell she loves this topic, because she probably looks forward to the tax planning meetings where she's like, all right, great. How much depreciation did we get this year? How much are we writing?
Oh yeah. Or, you know, maybe is this a good year to go ahead and buy that new roof, or to put a new paved driveway? Like, those are the kind of conversations, because this is something I want to kind of end with when we start wrapping it up. Remember, many of you in the investment world, you're doing other stuff. You know, many of my clients that are in investments, this is their way to build wealth, right? And so they don't just invest in rental properties. They may have a small business. Their spouse may be a W-2 earner. They may have all kinds of side hustles going on, right? And so remember, the idea between the growing the wealth and having that meeting is to say, okay, my rock star tax accountant, can you put all of this stuff together and actually tell me what this looks like? Because you can't see it all. Like, it's just not possible. The tax accountant has to magically put it together and then show it to you. And then you can say, okay, good time to buy that, you know, to build the roof, or good time to invest, or not a good time, you know, for whatever reason. So that's the reason why it's so important to have that relationship. It's a team effort. We started this meeting today, this Facebook Live, on saying we're a community here, right? You don't have to do any of this alone. Like, there's no reason why you're struggling, or, you know, or you're being left behind, or you're missing out because you feel like you don't have a community. I mean, Lisa, that's what you're doing. You're building this rock star community of people. And now your community needs to go and knock on doors and say, hey, I just heard this. Like, I need to meet with you and you need to help me, you know? So
I just love what you said when you talked about, you don't need to feel like you are doing it alone. And see, this goes back to those who've been listening to me for a while have heard me here. Who is your top 5? I'm huge on your top 5. You know, who does that make up? I mean, PCP, you know, your primary care physician or your holistic doctor, you know, your go-to accountant, tax professional, your financial advisor, your insurance advisor, and your super agent, shameless plug, but your real estate professional, you know, shameless plug, you know, hey, but who is making up your top 5? And as you talk, as you're sharing and saying, as an investor, and you are building wealth long-term, that it is a tax planning, you know, that strategy meeting where you're saying, hey, is now a good time for us to do something with the properties, add to the portfolio? And I have to bring on Linda's comment where she says, as you were talking about, she mentioned about her units being in a corporation. She says, love, delight, kind into tax-free. Florida, she says, though. With that being said, that's, you know, that's a great segue to my next guest, which I will be talking about the 1031 exchanges. You know, there's a saying you call pump and dump. People don't really know that strategy, right? You defer till it's, and you talk about a whole other level.
So it's time. Actually, that was one of a very cool strategy I did with the gentleman that started with small investments. Eventually, he actually bought this amazing apartment building, and he did it through 1031 exchanges. So again, you hear about it, right? Oh, someone mentioned a 1031 exchange. The only thing I'm going to leave you with is don't attempt to do that yourself.
Right.
Like,
no.
Learn. There's requirements involved. Like, there's time sensitive requirements involved.
Absolutely.
And so you need to be aware of those, and you need to get your top 5. I love that. I love the top 5 because those are the people that are going to make sure that you can get that 1031 and you can keep on continuing with your strategy with no hiccups. Right? Like, that's what you got to do. So I love that. Oh, and when are you going to put that person on? Because I got to watch that one. That's actually going to be really
just stay tuned, y'all. I'm telling you, this gets juicier. This show gets juicier. I was like, I have a whole lifetime of content that I'm bringing on because there's so much that we can learn, that we can offer. And I love to keep it simple on the show because not everyone is next level, not everyone's advanced. But for those who are, tiptoeing around this, hey, I want to be an investor, especially because, as we saw over the last year, there was the huge big campaign or the advertising about, America's largest wealth expo, and everybody is wanting to jump in. But if you don't have your top 5, you will be a disgruntled, frustrated, broke, bankrupt individual.
Yeah, true. It's true. And I want
to saying, "Oh, I tried investing and I got screwed." No, who's your team?
Yes, and one thing I want to mention, it's kind of cool because several people in my community that have now joined your community, I've seen that they're on here, which is awesome. And so I want you all to know that your top 5 don't actually have to be people you are working with yet. And I'll give you an example of that. So there's someone that you are following that they're what I call my online mentors, where they give so much value and you're just blown away by them. And you can have them on your potential list, because you're not sure when you're going to be ready to put them on the list, but you're following them, you're listening to their podcast, you're joining their meetings, you're watching all their lives, because eventually those people will go on your list. Those people will be someone that you could eventually do some kind of work with, whether you hire them or whether you collaborate, like with you and I, Lisa, whether you collaborate on projects. So just keep your eye out for that community of people that are just awesome rock stars, and don't feel intimidated that they're up here and you're down here. That's not the way it is. Nobody is up here. We're all in the same place. All
there. And I was going to say, and it's so awesome because, as Linda's saying, this is exactly why I do the show. She says, keeps my retired husband happy. Yay. Keep him busy and happy. And she says, being a landlord is a lot of work with an emphasis on a lot. Absolutely. And as you were sharing that, I was saying that this is exactly why we have this community, and we are. Jack Ma said this. Jack Ma said, in this information age, there is no one who is an expert and knows more than the other person, because we are all learning and bringing to the table.
Yep. Exactly.
You know what? I didn't quote him verbatim, y'all. I paraphrase his quote, but Jack Ma, he's awesome. And I'm saying that because as we create this community, there are people that I've connected with that are looking at me like, oh, you've got your show, you've got your podcast, but I'm still reachable. I still get connected. What do I say all the time? DM me, connect, build, and share LA Super Agent on all social media. I really mean that. And for those who have the guts and courage to actually do that, they are like, oh my God, you really are like what you said online.
It's true. And you got to hunt them down. I'll give you an example with Lisa. I mean, now you know the story, but we went ahead and we connected through a friend, and then we were even at the same event, and I was trying to hunt her down, but because I knew that we were both passionate about the same thing. And so, we don't expect you as an investor to go ahead and start searching out all this information, but just follow, you can use the 5, or have a friend of mine that says, listen to 3 voices, meaning who are those 3 people that lead you in the right direction? That will really help, because what will happen is as you listen to Lisa, she's going to bring somebody else on and they're going to teach you something. And then you're going to hear 1031, or you're going to hear, tax planning, or you're going to hear, you see Linda saying, oh my God, I'm keeping my husband busy with being a landlord, but I need to, we need to figure out better strategies. You're going to see these kind of things, and it's going to inspire you to say, okay, there's got to be a better way. There's got to be a better way, a smarter way of doing things. And that's just the way, that's how growth works, right? That's literally how growth and literacy works. So
this is amazing.
I'm really grateful.
This is so amazing, because what's happening right now is actually, we've got a little community. I see Linda's inspired some people to level up their portfolio. Desiree's like, I've got only 2 properties. Tenants can be in handful at times. She's shooting for 10. Rowena, thank you for joining in. She says, my husband and I are going to try an investment home in 2019. So that is super awesome. And as we're talking about right now, get connected with you. It may not just be the professional, the real estate professional. As we just learned, it's important to have that tax strategy meeting, as we're talking about. Are you, as we learned with Linda, and I've said this, and I'm going to do another shameless plug, Real Estate 100, the Teen and Millennial Investment Blueprint. This is actually what we teach. We actually teach the youth and young adults about what that looks like when you're investing, the financial accounting. Mariette gives us the big words in real estate. I only know them as, cash on cash return on investment, capital expenditures, expenses, the income. I know them that way. She knows them in financial accounting.
That's all it is. And that's what this is what the whole series was about, is taking the scary out of what we're talking about. Yeah. It's not that scary. I mean, it's kind of funny, because I think Lisa and I had a realization. She calls it one thing, I call it another thing. It's the same damn thing.
It's the same thing.
It's the same thing. You know what I mean? So it's like, and you can choose however you want to do it. But that's why, I'm going to close with this. If you want to build wealth, if you want to grow, if you want to make better, more confident decisions, and it's not because I'm an accountant, it's not because I'm a total nerd, you can't do anything without the data, right? What gets measured grows with you, right? It gets done. If you don't measure it, if you don't document it, if you don't grab those transactions and put them somewhere, wherever you want to put them, whether, again, it's Excel or QuickBooks, you're not going to be able to grow, because you're going to be making blinded decisions. And that there's no way you can move forward or drive your future blind, So you need to put those goggles on and start actually seeing what's important. And that's why I always start with financial accounting.
I like it. You know what? This was awesome. And like I said, we did our full disclaimers and disclosures in the beginning. We're not giving tax advice, definitely tips. You want to learn more, check out MarietteMartinez.com. She is on all social media. This woman rocks. And I feel like this was a good, hey, taking out the scariness. Like we said, this is part of our scary accounting series that we started on Halloween. We just in part 2. If you're just jumping in and listening to us, make sure you catch the replay, use #replay. And thank you all for joining in this week's conversation on Ready, Set, Real Estate. Be sure to check out our nonprofit, which this show supports, realestate100youth.org. It is our way of giving back to the youth, the young adult, the next generation, showing them alternate pathways to success via real estate empowerment, education, and literacy. All right, you guys, that's all for this week. We will see you next week on another fantastic and powerful episode of Ready, Set, Real Estate. Bye, guys.
Bye, guys.
Hey.